Okay, let's talk Walmart, WMT. Is this retail giant, the one delivering groceries by drone now and using AI partners, is it truly an unstoppable stock? Or is that price tag writing a check its actual numbers can't cash? Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're digging into WMT using our research based on data pulled just this morning, October 24th, 2025.
And we're doing this deep dive with, well, a pretty positive backdrop on Wall Street. Futures are looking green, the NASDAQ is leading things. It seems driven by a U.S. economy that's, frankly, surprisingly strong. And that strength, plus this huge wave of investment in artificial intelligence, is definitely giving the whole market a nice tailwind right now.
Right. So let's unpack Walmart itself. Operationally, they seem to be firing on all cylinders. They've got express delivery rolling out. They're using smart RFID tech for fresh food tracking, cutting down waste, which is huge. And this new OpenAI partnership for chatbot shopping sounds pretty cutting edge. Analysts clearly, like UBS, just bumped their target to $122. And 95% of analysts covering it are saying buy or strong buy. That's a lot of confidence.
It is. It's a really powerful story on the surface. You absolutely have to acknowledge their market position and how well they're running the business. But here's the big disconnect. When we actually step back from the headlines, run the numbers based on projected cash flow, growth assumptions, earnings, our fair value models, they paint a very different picture. They suggest the stock's really only worth somewhere between, say, 33 and 44 a share.
Wait, hold on. 33 to 44. That seems incredibly low compared to, the current price and what analysts like UBS are saying. What in the model is driving that number down so much?
It really comes down to simple math and historical norms. To justify today's price, over $106, Walmart would need to keep an extremely high PE ratio going forward indefinitely, and project growth rates that are, let's be honest, probably unrealistic for such a massive, mature company over the long haul. So yeah, it creates this huge canyon between the market price and the sort of core financial reality.
Okay, so a classic battle brewing, great company story, tons of hype, versus a valuation that just looks stretched. What's the crowd saying? Are traders buying the hype or seeing that canyon?
Oh, the sentiment data is crystal clear. Traders are firmly in the hype camp and basically ignoring the valuation warnings for now. Short interest is incredibly low, less than 0.5%. Essentially, almost nobody with real money on the line is betting big against the stock right now.
And the options market backs that up.
It does. The put-to-call ratio is sitting at 0.57. That's very bullish. For listeners, that basically means traders are buying almost 2 bullish call options for every 1 bearish put option. Strong belief the price is heading higher.
Okay, technically then, how does the chart look?
Technically, the stock's actually in pretty good shape. The underlying trend, definitely positive. And you see strong, sustained buying volume, which tells you real money is flowing in, consistently pushing it up.
But here's where it gets interesting, right? The twist.
Exactly. Here's where it gets really interesting. While that trend is positive, the momentum seems to be weakening. Our technical indicators are hinting that this recent powerful rally might be getting a little tired.
So not necessarily a reversal signal, but maybe a pause.
Precisely. It strongly suggests the stock might need to, catch its breath, maybe enter a period of consolidation before it decides on the next major leg up or down.
Okay, so let's tie this all together. We've got the positive market, Walmart's operational strength, great sentiment, good trend. But this glaring valuation issue, and now weakening momentum. What's the final call?
Putting all those pieces together, the good, the bad, the conflicting signals, our final verdict lands on a cautiously bullish outlook for Walmart right now. The caution comes directly from that, frankly, massive overvaluation and the technical signs of momentum slowing down. You just can't ignore those potential headwinds. But we remain bullish overall because the positive macro environment is still supportive. That analysts and options sentiment is overwhelmingly positive. And, the underlying trend is just too strong to bet against completely at this moment.
Got it. So for anyone trading this, the key levels become super important. Where's the immediate battleground?
Yeah, it's pretty clearly defined. For the bulls, they really need to push price up and break through that key options resistance level we see right around $109. For the bears, or even just for consolidation to take hold, they need to break below the options support level, which is acting like a floor right now near 106.
And the absolute line in the sand, the point where this short-term bullish idea gets into trouble.
That would be a daily close below yesterday's low. So keep an eye on $105.78. A close below that level would invalidate the immediate bullish setup, in our view.
Okay, so wrapping this up for you, the listener. Walmart feels like that star quarterback everyone's cheering for, running the plays well, innovating.
Yeah.
But maybe its college application, let's call it the valuation, has some serious holes under scrutiny. The momentum has been incredible, but you really have to ask yourself, how long can that momentum defy what seems like financial gravity, especially when the core numbers are flashing caution? Something to think about. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.